Hello, VITA students. This training is going to focus on the advanced scenario for Amy Johnson. In this training, we are going to create the return, the federal return, and the Wisconsin return for the client. You should have received the interview notes in the VITA training materials that will enable you to create the return. All right, so I already went ahead and entered the social security number for this client, and we are told in the interview notes that there is a filing status of single, so we're going to click single. We're going to click continue. I went ahead and just filled in the information, the personal information that we were provided. So after the filing status screen and the personal information screen is complete, then we can go ahead and click continue. We know that from the interview notes that the client single has no dependents, and she is not a dependent of anyone. So we are going to go ahead and just click continue. All right, so with regards to income, we are told that she has W-2 income. So we're going to go ahead and click on the W-2 screen in the income screen. So we are going to keep this box checked that this is a standard W-2. We are not provided with the employer identification number in the interview notes, so let's just go ahead and, for purposes of this exercise, we are going to just create one. So, and the same with the employer. And the address. So we'll just go ahead and make up an address for purposes of this this training. Now we have been given the amount of wages, and that amount is $15,000. We are told that there is no federal or state withholding. We are also told that the W-2 shows 1,000 in box 12 with code W. So we are going to scroll down to box 12. We are going to click on the code W. We are going to insert 1,000, and we have not been provided any of this information, so we'll keep those blank. We likewise are going to keep box 14 blank and the state and local information blank because we have not been provided any of that information. We're going to go ahead and click continue. and you will see on the top right screen the 15,000 income W-2 wages has populated and has been included in the adjusted gross income for tax purposes. We're going to go ahead and click continue. Now we have also been told that Amy has another stream of income. It is per capita income from the tribe, and that income was reported on a 1099-MISC for miscellaneous income. Now, in the income section, we can see the 1099 MISC. We're going to click begin. Again, we have not been provided with the payer's TIN, so we'll just go ahead and make one up for purposes of this exercise. We are told that this is per capita income from the tribe, so I'm just going to I will make up an address since we have not been provided one. And we are told that box 3 shows $3,000. So we're going to go ahead and enter that there. We are not provided any additional information, so I am going to go ahead and click continue. And in the upper right hand side, you will see that the adjusted gross income is now $18,000, $15,000 in W-2 income, and the $3,000 in 1099 miscellaneous income that we have entered. Now we have also been told that Amy has a form 5498-SA. So we are going to see if we can find, let's just click. All right, so here it is. We'll click on this. All right, so we're going to make sure that self-only option is inserted. All right, so we know that this is relating to Form W-2, Box 12, where we entered 1,000. So it says, do not include employer contributions or contributions made through a cafeteria plan, Form W-2, Box 12. Okay, so we are not going to insert that. There's been no distributions that we are aware of and no adjustments that need to be made. So we are going to go ahead and click continue. Okay, that's the screen we just came from. All right, so the next step is going to revolve around the tuition she has paid for her school, the expenses she has incurred, the scholarship that she has received. So we are told in the interview notes that Amy attended school as a full-time student. During the spring and fall semester, she received a 1098T with 8,500 in box 1 for tuition and 12,000 in box 5. For scholarships and grants, she also paid 5,500 for books and 100 for a campus parking pass. The scholarship she received includes a tuition-based scholarship of 4,000 and a federal Pell Grant of 8,000. Amy has never taken the American Opportunity Credit in the past, since her grants and scholarship exceeded her tuition and book expenses. And this reflects her second year of post-secondary school. She has not been convicted of a felony, and her earned income is over half of her support. Amy would like to maximize her education credit if possible. All right, so go ahead and pull up the education credit maximization, because this situation for Amy provides us with an opportunity that we can go through with clients, where we can utilize the scholarship income inclusion strategy, or the education credit optimization. So I'm going to go to the basics screen, and I am going to call your attention to this lettering that is highlighted in red. So when scholarship is received and the net qualified education expenses are less than 4,000, scholarship income inclusion strategy needs to be considered. So currently, we have been told that box 1 of Amy's 1098T shows 8,500. We are also told that box 5 shows 12,000. We are also need to figure out the other qualified education expenses: books, equipment, and supplies. In this case, Amy does have other qualified education expenses in the amount of 500 for books. The $100 that she incurred for a campus parking pass is not an other qualified education expense, so we are not going to include that. So if we are going to change these numbers for our purposes, it would look like this. All right, so the net qualified education expenses for Amy is less than $4,000. In such a case, we need to consider the scholarship income inclusion strategy, which we will do. Now I am going to click on the quick calculator, and we can see those same numbers here. The tuition and fees, the scholarship and grants, the $500 for the books. Because this amount is less than $4,000, we are going to proceed to this section below to help us determine how to adjust these numbers. So the gross qualified expenses that we have are the gross qualified education expenses are $8,500 plus $500, that is $9,000. The net qualified expenses, the net qualified education expenses that is optimal for us to obtain the amount of credits, the education credits that we need, is 4,000. So the 9,000 minus the 4,000 is 5,000. And that is the updated scholarship amount. That we are going to include in TaxSlayer. And I will show you that in just one moment. Now the amount of scholarship that we are going to include in income is going to be 7,000. Go back to TaxSlayer and I will show you how this looks. All right, so we're going to click on credits. We're going to click on education credits. All right, so we are going to go ahead and go in here. Do you have a form 1098-T? Yes. Did the student receive this information from the institution last year with box 7 checked? We do not have that information. I'm going to click no. We have not been provided this information, the EIN, the institution, the university name, the address. So I went ahead and just added this. Just made it up for purposes of this exercise. All right, so if we were not taking advantage and utilizing the scholarship income inclusion strategy, these are the numbers that we would insert. And these numbers, we are told, come from the 1098T, the 8500, the scholarship and grants in box 5, and the other qualified expenses. However, inserting those amounts as they are results in, as we discussed from the Excel spreadsheet, net qualified education expenses less than $4,000, which means that we would not be able to take advantage of the education credits for our client. So instead, we are going to keep the tuition paid as is. We're going to keep the other qualified expenses as is. But as discussed, we are going to reduce the scholarships and grants amount to $5,000. We're going to click continue. And as we update the amounts, you can see the amounts update over here. Has the American Opportunity Tax Credit already been claimed? No, we're going to click no. Was the student enrolled at least half-time for at least one academic period? Yes, we are told that the client is full-time. We're going to click no. We are told that Amy is in her second year of post-secondary school. We are told that Amy does not have a felony drug conviction before the end of 2025, so we're going to click no. Is Amy eligible for the refundable portion of the American Opportunity Credit? We are going to click yes, because based on 1, 2, and 3, based on this language, she is eligible. So we're going to go ahead and click continue. Okay. All right, now we will then need to go ahead and enter an amount, the updated scholarship amount of $7,000 in taxable income. And I'm going to pull back up the spreadsheet, and you can see that the 5,000 um, $5,000 was entered in the grants and scholarships box. And now the $7,000 we need to enter in other income with the pull down option of description of taxable grants. So we're going to go ahead and do that. We're going to go back to income. All right, so we're going to scroll down to other income. All right, so other income, income not reported elsewhere. So we're going to click on this. First, we're going to include the $7,000. And we're going to choose the taxable grants amount. All right, then we're going to go ahead and we are going to click continue. We're going to click no. We've not been given that information. All right, it seems to be glitching at the moment. Let's see. All right, so what I'm going to do is go ahead and let's just go to the summary. All right, now you can see the result. The client is now receiving a refund because of the scholarship income inclusion strategy or the education credit optimization, however you want to refer to it, that we employed for this client. So beforehand, the client, without the strategy, the client would have owed tax. Now, the client is receiving a refund of $1,000, all by including a certain portion of her scholarship income, of her scholarship in taxable income. That enabled the client to take advantage of the education credits, refundable and non-refundable, and receive a refund back of $1,000. Now, if you go through the tax return, you will be able to see where, let's see where the credits are. All right, this might be a quicker way. Okay, so the additional credits and payments of Schedule 3. You can see the non-refundable credits of $928 for education. So an education credit, non-refundable credit of $928. Now what this $928 does is it reduces the tax to zero. So initially Amy had a $928 tax owed, and the amount from Schedule 3, line 8, the non-refundable education credit, reduced the tax to zero. Now you can further see that the American Opportunity Credit, which is the non-refundable portion, the refundable portion, which means that even if you owe zero tax, if a refundable portion of a credit applies, you get that money back from the government. So not only were we able to take advantage of the non-refundable education credits to reduce Amy's tax to zero, but we were able to she was able to receive the refundable portion of the education credit. So she receives $1,000 back. All right, so now I want to walk through the state section. This training is important for various reasons. First being the education credit optimization strategy, which we just walked through, and that's important on the federal aspect of Amy's return. Now there are a couple important aspects for Amy's Wisconsin return. Sorry, one second. All right, so we're going to go into the Wisconsin return. This information was already added. All right, so the first aspect of the Wisconsin return that is important to note is the adjustments that need to be made. So it is important to read through the Form 1 instructions for the Wisconsin return to get an idea if any adjustments need to be made. For Amy, there are adjustments that do need to be made, and more specifically, subtractions from her income. And the subtractions are made on Schedule SB. Now we are going to click Begin on the subtractions from income. Now one of the subtractions that is allowed, and there is a list, so you will need to determine if any of those apply to your clients. But for Amy, one of those subtractions is the tribal income. So the W-2 wages, if we remember from the interview notes, Amy Johnson, a Native American, lives and works part-time on an Indian reservation. And that is where the W-2 wage income is from. Now, Publication 405, which is the Wisconsin taxation related to Native Americans, it states that wages from working on their tribal land is exempt from income. Now, we're going to go ahead and we're going to subtract the income. Let's see where we can find it. All right, certain income received by a Native American, and this is again is the W-2 income that Amy received from working on the Indian reservation. We're going to enter 15,000 there. Now the other subtraction that is allowed for taxpayers is tuition and fees expenses, and you can see that category right here. We're going to enter the net qualified education expenses, and we're going to go ahead and click continue. All right, so let me just see real quick how that looks on the Wisconsin return. You can see the amount of tax just updated due to Wisconsin, which is 0. All right, so we're going to scroll down to the Wisconsin return. All right, so the federal adjusted gross income, this is taken from Form 1040, the federal return. This is the wage income from the W-2. All right, so let's see. Total subtractions. All right, we have the 15,000, but it did not add the 4,000. All right, so let me go. So the software has been glitching recently with regards to the state return. So we're going to go back into subtractions. All right, so ordinarily the subtraction for tuition and fee expenses, you enter it here and it should subtract that amount. However, it has not been doing it today because of a glitch, so I'm going to go ahead and I am going to enter it here. I'm just going to put education expenses, and all right, let's see, We're going to go ahead and exit the Wisconsin return. And I'm going to pull up the Wisconsin return one more time. Okay, all right, so this is correct. Now, even though I had to double enter the education expenses, the total subtractions for Amy should equal 19,000, and that includes the 15,000 tribal income that she is permitted to subtract from her income for Wisconsin tax purposes. Also, it includes the 4,000 education expenses. All right, so the federal adjusted gross income is 25,000. The total subtractions 19,000. So the Wisconsin income is 6,000 now. The standard deduction is 13,560. And there is an exemption. So you can, based on the math, you can clearly see that Amy has no tax liability. Now, there is one other aspect of the Wisconsin return that I want to bring to your attention. Amy lived in Wisconsin. This is the last paragraph of the interview notes. Amy lived in Wisconsin for the whole year in 2025 and paid rent of $9,600 with heat included, and would like to claim the homestead credit if possible. All right, so some information about the homestead credit in Wisconsin. What it does is it provides direct relief to some homeowners and renters. But it is important to note the qualifying and disqualifying factors. For example, one factor is that total household income must be below $24,680 for the year 2025 in order to claim the credit. All right, now, of course, there are other factors as well, and that is why it is important to read thoroughly through the Form 1 instructions. But it is also important to be aware of the interaction between the homestead credit and the special rules for the tribal income and tribal property. So even though, as I've just shown you, the tribal income may be subtracted from Amy's taxable Wisconsin income, it must still be included as part of her total household income when determining eligibility for the homestead credit and calculating the credit. So we can see that the 19,000, which includes the 15,000 tribal income, it reduces the adjusted gross income of $25,000. Now, that is for Wisconsin taxation purposes. For the purposes of the homestead credit, this $25,000, the $15,000 would have to be added back. So that essentially the $25,000 would not be reduced by the $15,000 for purposes of calculating the homestead credit. Now you can see it has in certain cases where adding back that tribal income to household income could increase the total household income above the threshold amount of $24,680 for 2025, therefore disqualifying a client from taking the homestead credit. So that is something that needs to be aware of. Now, something else to be aware of is the property exemption. So for purposes of the homestead credit, one of the disqualifying factors is living on property that is exempt from property taxes. I'm going to go ahead and exit out of this, and I'm going to go back to the state section. Now, in Wisconsin, tribal lands can be exempt from property taxes. So additional questions should be asked regarding this because, for example, if Amy lived in a property, if she rented a property that is exempt from property taxes, that could disqualify her from taking the homestead credit, even if she qualified otherwise. So if you wanted to, for a client, fill out the homestead credit, this is where you would go, the state-specific credits, and then you would find the homestead credit, and then you would need to fill out all of this information. And this goes through some of the qualifying and disqualifying factors. Here is the determination of the household income for purposes of the Wisconsin return. And this is the tax and or rent section. So you would select the type of homeowner or renter. All right, so that is the Wisconsin return and the aspects of this training scenario that you should be aware of. Thank you very much.